Okay, hey, here to help us, the investment pros. Joining us for the first time, my man Rob Taub. He is a top political analyst. He's a very smart guy. Forgive him if he leans a little bit to the left. Our other friend, Jim Frischling, president of New Oak Capital. He's with us again. Hillary, maybe this is the part, Jim, that they call consolidation. And people should understand at home. Usually the market makes a big move to the upside, a huge move like this bottom from the October bottom, and then moves sideways to Matt's point. That's normally the time that the bears can make their move. They tried this week. We consolidated gains. Anybody who was a nervous seller had an opportunity to sell. Most people said, no, I want to hold.
No, I agree, and I think people were betting against the consumer, and they bet wrong. The fact is, it was a big economic day. You highlighted retail sales. We talked about consumer sentiment. We talked about lower gas prices, and the fact is, the consumer, there is legs to this rally, and I think as people start to digest what we're going to see for the holiday season, I think you're going to see some money being spent well beyond the previous few years.
So a nice balance. Some of it, you get cash flow coming in, and some of it's just a core position you don't sell. Jim, what do you make of the notion, though, that investors are late? This is a Wall Street. Listen, and when individual investors come into the market, it's usually time to sell. The AAI chart, the American Association of Individual Investors, spiking the way it has now recently with the bullishness. Does that scare you a little bit?
Well, I mean, one of the reasons for that contrarian point of view is if everyone's bullish, then the question being asked is who's taking us higher? Who takes us to that next level if there are no more buyers? But I agree with Hillary's point about
But isn't it trillions of dollars still on the sidelines?
And this has been an unloved rally, and the fact is I still think the stock market represents the most compelling place to be deploying capital. You have to have a plan. You have to know. You have to do your homework. You have to know what you're investing in. I'm stating the obvious, but the fact is, if you're going to trade something, did something change in your thesis? Was there something that materially changed that makes you step out?
You just used the word, though, and this is one of the confusing part. You just said trade.
Yes.
There is a distinct difference between trading and investing, and I think this is where people get confused and mixed up.
I appreciate you called me out on that. We've been talking about investing, and typically an investor, when something goes wrong, then all of a sudden they convert to a trader.
Right.
And to Hillary's point, don't do that. Stay the course. Unless something changed in why you bought that stock, if something changed, then maybe you have to rethink.
Matt, you and I, listen, guys, this brings us to our last real deal. Jim, listen, this is a nation of immigrants, right? We all know that. That we need them. So they come in. They start a house, they start a business. In most cities, immigrants actually are starting more businesses as a percentage of the population than the actual population. It's amazing. So how do we reconcile the two?
Well, I mean, I think the first thing is you have to recognize that what we currently have doesn't work. You have to recognize that this is a problem and it needs to be solved. Doing nothing is not remotely an option. So I agree with Matt's point about it being illegal. They're here and it has to be addressed. So what is the plan? What are the consequences, both intended and unintended? The cost of those consequences. How are you going to pay for this? And basically, what are the things we can attack? People have been here for 10 years with children. They're in. That's 2.5 million people. 5 years with kids. That's 3.3 million people. We have to adjust the border issue. We have to address the visa issue. So I know there's a lot of stuff here, but the fact is there needs to be a plan. Doing nothing. I don't care which side of the debate you're on. If you do nothing, they're already here and they're already extracting resources.
What the president is hinting at, though, is the de facto amnesty. Another step further from being able, you're talking about tying the Gordian knot, another knot. I'm putting another knot in there.
I don't like the executive order whatsoever. Matt made the point about where the polls are. The fact is, if he does this right now, the next 2 years, it's going to be the government, if it can be more dysfunctional.
You talk about unintended consequences.
I don't mean to interrupt. On that wage conversation, I can't tell you how many jobs are available that I hate to say it, a lot of Americans don't want to take. So but
you know what? Because what's got to go with that, Jim, hand in hand, is we got to have welfare reform.
Yes.
A lot of Americans don't want to take them because they don't have to take them. You guys remember, I'm really worried about opening that can of worms, too. I think that's dangerous stuff.
I mean, I think there is an unfair element here, but if you don't take these actions, they're in this country, they're children in this country. I don't want to create this opportunity where people say this is the path in. I don't think we can't come up with a solution that's going to be 100% positive. We're not.
Let's leave it there, guys. Now, you picked Microsoft, MSFT last week, and you talked about a potential spinoff. Either way, you're up 8%. You still like this?
I do. And the spinoff conversation was about the Xbox and some of the things I thought they might want to dispose of. I think the company's continuing to transition from PCs into cloud and services. I do like it. It's not a screaming buy, but it is a core hold for anyone in the technology space.
I mean, it's not a screaming buy. How you come on the show without a screaming buy? You're supposed to bring the screaming buys on the show.
It was a screaming buy when I recommended it before.
Oh, 8%.
Now it's up 8%.
I got you. All right, Heath. Great call on Lynn.
They're on the upper end.
One of the things I just heard was why did they expect this to be forgiven? And they just witnessed a mortgage market where there was a lot of forgiveness given. They witnessed bailouts. It's a different animal. But the fact is they just watched a whole lot of bailouts.
Because when I went down to Occupy Wall Street, the first couple of days, what I found were a bunch of kids who go to Columbia, NYU. They're going to have an amazing life. They're going to make a lot of money. They'll all be rich before it's all said and done. But there was a lot of, A, they were afraid. They didn't want to jump into the job market without starting off on $100,000. And B, they felt resentment that, hey, every time something goes wrong in this country, the fat cats get bailed out. It is hard to say that they're whiners when Wall Street always ends up being able to go into our pockets for money.
Yes.
And I know you agree with that, Rob. All right, Jim. The Teachers Association call to action. Is that the solution? I mean, I just think they've got some serious nerve. I really do.
It's not the right call to action. The fact is the price of college is so much higher in part because of the availability of student debt and student loans. The colleges, their budgets have not ballooned, and they couldn't have raised the prices but for the availability. So the system, the student loan market needs to be reworked. Forgiveness is not the answer. We do need to have a more thoughtful plan around this. But the fact is if you continue to have access to money and you even think you're going to get forgiven, you're going to borrow more than you can afford to pay back.
You know, this is
the motivation. If the schools can continue to raise more funds charge more, the teachers are only going to be in better shape.
Well, and the reason to be able to charge more, and we talked about at least on a college level, is how much money is available through the taxpayer. $1.3 trillion. That's slowly becoming a huge ticking time bomb. I don't know about you. Look like you kind of.
I was thinking about I didn't take that kind of beating from my father, but okay. I'm going to be in Matt's camp on this one. I think the arbitrator is going to give him the free pass. Sorry, allow him back. I think Minnesota's going to stay away from it and say we don't need it right now.
Yeah, well.
I think we've been.
I had to go out and grab the switch a few times. All right.
I can't get there with you guys, and I'm probably going to be the odd person out, but it's the valuation that bothers me. 67 times forward earnings. You know, what is this company? Consumer companies are trading in the 20 times. Recreational products are trading, maybe 30 times. This is 67 times, and it's a camera company.
I'll tell you, sure, long term, I agree with you, Jim. I don't believe this is maybe a year and a half hold for me.
Jim, what are you looking for next week?
Actually, you nailed it with you mentioned oil. I think there's a good debate going on between global supply versus global demand, and I'm in the category that I think the price of oil is dropping because of the supply issue, which actually is going to help feed a bigger leg up to the market, more money in people's hands because of cheaper gas. It's not the demand; it is the supply. So that's what I'm watching.
What are you looking for next week?